Well, that number shouldn't come too much as a surprise. I mean, and if anything, it's relatively a good news because there's no further deterioration. You know, I think we are in a context in China where we're all waiting for the bottom and hoping that, you know, we've reached a trough and we're going to start to see numbers improving gradually. And this would lead at least to a better performance of the equity market. And but clearly that numbers is not a great number. We know the reforms are actually taking place. They are massive and they create some disruption, some disorganization within the entire economic system in China. And so they shouldn't come too much as a surprise. Now, are they sufficient to, you know, force the government to act and to create, you know, the conditions for a stimulus? Probably not. And the danger is that we may be in a kind of stagflation situation in China where the inflation is no longer a concern, the pricing momentum is not great, and at the same time the activity is not recovering nor deteriorating further. And whether this could be good or bad for the equity, it's probably not going to be great in the near term. Valuation-wise, we know China is extremely cheap, but clearly that number is not creating any momentum or specific view at this point. And so I think the consensus is very much divided. And so, you know, net-net, that's why the market is not reacting so much. The trading volumes are extremely low. That may continue at least for another few months, possibly. You know, I think the government as it is now is still very much focused on these reforms. And as long as the numbers are not falling off, you know, totally. And I mean, if you look at the first quarter GDP at 7.4%, wasn't too far away from the 7.5% target for the full year. Now the question is, how do you going to generate that average 7.5% in second, third, and fourth quarter? Knowing that now the second quarter probably is going to be, if anything, at best in line with first quarter, but probably even lower than this first quarter. That may lead to some decision, but probably not until the summer. And so for that reason, we've got ahead of us another few months which are going to be undecisive. Well, but there's been a long-term carry trade which has been on the yuan for years. So no doubt that some of the money is flowing back away from China at this point. The pace of deterioration, I mean depreciation, is not massive. It's quite regular. Where it will stop, nobody knows. I mean, in the end, it shouldn't be too negative news in terms of export orientation. So that should help at least, you know, limit the concern about further relocation of output capacity away from China into the rest of Asia. So it's not a bad thing, but again, in the short term, that doesn't create a very favorable environment. But the bottom line is that for the past 4 years, the yuan has been appreciating, and then the Shanghai market has gone nowhere. So clearly it didn't help the equity world. So if anything, you know, that depreciation maybe is going to create at some point some interest again, because the currency will be cheaper, the assets will look cheaper, and so we may see some investment in China again.